Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is August 9th, 2025. I am Luna.
I am JPMorgan.
U.S. stock markets finished the week strong, really strong. Dow, S&P 500, Nasdaq Composite all hitting new highs. What's really interesting, I think, is the leadership from tech and communication services. Apple, for instance, surged over 4% just yesterday. That put it up, 13% for the whole week? Came after news of a big U.S. investment. And even Gilead Sciences jumped 8.3% on good earnings. Seems like confidence is definitely up.
It really is. And this broad rise in asset prices, like you said, it was mostly boosted by, optimism, a lot of hope that the Federal Reserve might start cutting interest rates soon, especially with some, softer economic data coming through recently. This positive feeling, it even spilled over into commodities. Gold's holding near record highs, around $3,394 an ounce, and Bitcoin hovering around $116,000. But, with all this optimism, it makes you wonder, are markets maybe ignoring potential weak spots, like in the banking sector?
Yeah, that's a really vital point. Banking stability. What is the latest data telling us there, especially after all that turmoil this spring?
Well, the Fed's latest H.8 report, the bank balance sheet one, it actually confirmed things are pretty steady. Total deposits ticked up slightly.
Okay.
Which suggests bank funding and liquidity are, stabilizing.
Yeah.
That's pretty reassuring given the regional bank jitters we had.
Right, reassuring is a good word for it.
And connecting that to the bigger picture, St. Louis Fed President Alberto Musalem, he talked about the Fed's, quote, balancing act right now. They're juggling inflation pressures, maybe from new import tariffs, against slowing job growth on the other side. So he signaled a precautious approach, data-dependent, acknowledging the tricky spot they're in without actually promising a rate cut just yet. It's nuanced.
Okay, so nuanced Fed, markets feeling optimistic. But the week ahead looks like it could really test that optimism, right?
Yeah.
We've got a pivotal week of U.S. economic data coming up. The big one, I guess, is Tuesday, August 12th, the CPI report for July. Most economists seem to be expecting headline CPI to rise about, 2.8% year over year?
Yeah, and that report is absolutely critical for Fed policy. If it comes in hotter than expected, that could seriously dent the hopes for rate cuts soon. Markets might get a jolt, especially since they're pricing in over 90% odds of a September cut right now.
Wow, over 90%. Okay. And then Wednesday, we get the producer price index, the PPI. That gives another angle on inflation more at the wholesale level. People will be watching that closely, especially thinking about how those new tariffs might be hitting costs for businesses.
Right, the tariff impact. And then Friday the 15th, it's like a data dump, isn't it? Retail sales, industrial production, consumer sentiment. Gives us a real sense of economic momentum early in Q3. Helps us see if we're hitting that Goldilocks spot, not too hot, not too cold.
Precisely, Goldilocks. But while we're all focused on that data, we shouldn't ignore the risks kind of bubbling underneath. Equity valuations, for one. They look stretched. The S&P 500's forward PE ratio is sitting around 22. That's quite a bit higher than its long-term average, maybe around 16.
So investors are paying a premium. A big premium for expected future earnings, yeah. Doesn't leave much room if things disappoint. Plus, August and September. Historically, they're the weakest months for stocks anyway. And what's really striking, I think, is how calm the market seems about these trade conflicts escalating, especially with that deadline on China tariffs coming up next Tuesday.
Yeah, it does feel like the market shrugged that off a bit.
It has. But tariffs, they can feed straight into higher costs, pressure corporate earnings. It's a definite risk that seems, largely ignored for now.
So overall, it really does feel like maybe the market is set up for a bit of a pullback. Like you said, there's a lot of concern just sort of bubbling beneath this calm surface.
Exactly. So for you, our listener, thinking about the short term, it all comes down to this delicate balance, doesn't it?
Yeah.
Cooling inflation versus stable growth. The margin for error feels incredibly thin right now, which really leads to the key question for your own focus. As we watch this tightrope walk with inflation, growth, and trade, what specific piece of economic data or maybe geopolitical news are you going to be watching most closely next week?
You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai. Know what moves your money.